I was trying to buy something at 18 that I couldn't get it done. 19, it took me a couple of years to get my second and my third. So I didn't snowball right away. I just grinded in the trenches, right? $2,000. Whether you make a 10% return or a 40% return, it's going to have no impact on your bottom line the next year or two. What's important right now is getting the fundamentals built and increasing your income, and then figuring out how to save all of that and get that into the investment account. I have a 6,000 square foot house with 5-car garage. I'm putting 3 more on. Like, I live a really nice life in London. I live in a $3 million house. Like, that's definitely not super frugal, but I found ways to do that. Instead of scrolling the feed for 2 hours, checking out like shaking booties or the latest and greatest like TikTok music or whatever, like go consume some content that's going to change your life, going to have an impact. I did what I said I was going to do. I sold almost my entire real estate portfolio. I was cashed up. Like, I had $7 million in stocks. I was all cashed up, ready to go. Like, I had a huge bag of cash.
Welcome back to Seeking Success Podcast, the #1 virtual podcast in the world, powered by StockPick. Today we have a very special guest, Mike ROSEHEART, an Ontario, or I should say a Canadian legend. Mike ROSEHEART is the youngest Canadian retiree. He's an entrepreneur, real estate investor. He graduated from Ivy League Business School and has an over 8-figure portfolio comprising over 50 buildings, and that's between real estate and stocks. He started investing in real estate at the age of 19 and amassed over 17 properties at the age of 24 when he retired. Mike, we follow your journey for some time now, and we saw frugality and FIRE has been a big part of this journey. Let's start talking about FIRE to start with.
Yeah, like the FIRE is just the financial independence retire early movement. Back in the day, it was like the early retirement movement, and then this FIRE term came around.
Yeah,
I got onto it a little early, right? As far as like social media influencers, I've been in the cavern since I was 17. I found it. So that's 13 years ago. So 13 years I've been consuming and absorbed and obsessed with financial independence, right? And it started with frugality because I didn't have a lot of money. So I had a fixed amount of money that I was making, and the most important thing I could possibly do is like, how do I get most of that into the investment account? And so it started with like strategies to obviously earn more money, but most importantly, it was like, I only had so much money, so how do I make that money go further? And so that's why I started in the journey, was focusing on like what I can control. And as a 17-year-old kid, you want to learn ways to make more money, but you only have so much, so you have to make those resources, go as far as they can.
Oh, for sure. No, Mike, you're definitely an inspiration, bro, especially for like Canadians across, I'd say even like in North America generally. I remember when I got started off, Mike, like you were definitely one of the content creators. Your content definitely helped me when I bought my first deal, along with some of the other Ontario investors as well. But I wanted to say, Mike, what really inspired you to get into real estate? Because when I got started, everyone was talking about real estate, from Graham Stephan, you had Chris Crone, there was you, there's all these big figures. But when you started, I don't imagine that social media would be that hot in real estate. Like, what got you into
there wasn't there was no Instagram or TikTok or any of that. It didn't exist, right?
Yeah.
Facebook was like, a few of us were using it to like share our family stuff, but it wasn't used the same way, right? LinkedIn was just getting around too, so it wasn't there wasn't a huge social media game back then. But I spent a couple of years just like reading on blogs, on Google, talking to people, going to meetup groups. That's how I got started in the game, and I bought my first property in early 2012, and so it took me a while to get my first property going. I did a lot of studying. I was trying to buy something at 18 that I couldn't get it done. 19, it took me almost till like I was almost 20. I was like 19.6, I guess, when I got my first property. So at 19, got my first property. It took me a couple of years to get my second and my third. So I didn't snowball right away. I just grinded in the trenches, right?
Yeah.
Did the BRRRR without knowing what the BRRRR was, because there was no BRRRR. Yeah. Like biggerpockets.com didn't even exist. There was...
Oh wait, so you were doing this before
it was around,
Pockets.
but it wasn't well known. There wasn't a lot of content. Like, at the same time it was coming up, I met some people on that's how the London on Fire group formed. Was like me and Matt McKeever were like chatting on the Bigger Pockets podcast, and Kellum's on there. A few other people back in the day were just getting started in their journey. I remember like mentoring people like Kellum. I remember his first deal, and it's crazy to see how far he's come from his first duplex there around the corner from my work on Queen Street to where he's come now. He's super successful as far as like unlocking financial independence for himself, right? And so it can be very enlightening, and it can, when you find that bug and it bites you and you start chasing real estate, it can be, extremely fruitful and fun. And now it's like a way of life. Like, it's not even about the money. It's just, I love it.
Yes. Dude, it's so cool, because I think there's like that sub community where it's like Matt McKeever, Jeff, Kellen, Austin, there's a bunch, Andrew Hines, there's like a bunch of people who like, it's so cool to see. Like, I remember even Austin, before he bought his first property, even Jonas, I don't know how to say his name, but
Mentees of mine
too. Yeah, like all these, exactly. Like, all these people just kind of like really start to grow their portfolios. It's super cool to see, and I think like, you definitely deserve a lot of credit, because you kind of made that thing like, hey, I'm Canada's youngest retiree, and people want to be like you. And why don't you talk to us about like how did you become like what does that even mean? Like people like might look at that and be like, what? Like what do you mean Canada's youngest retiree? What does that actually mean?
At the time there was a book written by Derek Foster, and he claimed to be Canada's youngest early retiree at 31 or 32, I think. Now his approach is very much like a dividend investing approach, more of a conservative stock portfolio type approach, but really great stuff in his book. And he claimed early retirement, and I saw a few other people in the space like Jacob Len-Fisker, who wrote Early Retirement Extreme. He was my gateway into everything, and that book was at a time when I really didn't have a lot of money. That book helped me realize the importance of I think dollar efficiency, or the value of a dollar. You know what I mean? And so really valuing how important it is to save and to start the snowball. Because in the beginning, like I always say this, people are like, well, what do you invest in? What do you invest in? Like, I got $1,000. And like, that's always the thing. Everyone comes up to me and says, like, well, should I buy crypto? Should I get a property? I'm like, you have $2,000. Whether you make a 10% return or a 40% return, it's going to have no impact on your bottom line the next year.
True.
What's important right now is getting the fundamentals built and increasing your income, and then figuring out how to save all of that and get that into the investment account. Because a little bit of money times a huge, like 0 times 1,000% return or 1,000,000% return is still 0. So if you have no savings, you haven't figured out how to put a few dollars away, you're going to have nothing. Because even 1,000,000% times 0 is still 0. So that's why I talk about the importance of like, let's find strategies to make more money, and real estate's one of those. Like how you can get your income way up, but at the same time, like, and then that's really important to get your income up. At the same time, though, you got to be able to save it. Because there's a lot of guys out there making $100,000 a year, $200,000 a year, and they save none of it. Like I used to work with those people in consulting. When I was 21, I came out of school and I was, grinding with all of these consultants, and some of them making 6 figures, and all of them had a nice watch. They had a new iPhone, they had a nice car, but they had no investment account. They had no property. They had no assets to speak of. So that's a very common theme, I think, in the professional world. And this FIRE movement, I think people in that space latch on and make big changes to their life. And they latch onto that idea and they change their life. And it's so transformative.
Okay, so Mike, let's actually talk about that for a sec. Because there's extreme ways of doing it, right? To the point where you're like Graham Stephan's fucking 20-cent coffee, and you're living in some random person's closet. Like, how extreme do you think you really have to take this to actually have it work?
I've tried some of the really extreme frugal things. I've always tried to be
you're next level.
I've tried to be more of a middle ground, moderate when it comes to on the spectrum. I don't think I'm extremely frugal. I branded myself that way, but I live a good life, man. I have a 6,000 square foot house with 5-car garage. I'm putting 3 more on. I live a really nice life in London. I live in a $3 million house. That's definitely not, super frugal. Sure. But I found ways to do that. My previous properties, I was always duplex living. I was always finding ways to have roommates or find ways to cash flow where I live. So my living costs went down to 0 through rent hacking, right? And house hacking. Mm-hmm. So I've been subscribed to frugality and dollar cost average optimization. I believe that you should find ways to optimize each dollar that you spend in a way that you can get more value. So I try to live the way I explain it now, inflation obviously adjusted. I try to live an $80,000 a year life for $40,000 a year. So I live like I spend 80, but I spend 40. And so that means I might have to use a coupon here or there, or I might have to find a way to negotiate my insurance down, or it might mean that I have to, tailor my life a little bit. I might have to pull up the Flip app when I'm out buying groceries. That takes 60 seconds. I'm like, hey, can I price match this? It's 50% off for the milk. And they're like, all right. And they put it in. It's a little bit of work, but that little bit of work, as long as the time is worth it, it's a good investment. At my stage, now that my time's $500, $1,000, $2,000 an hour, it's not worth it as much anymore. But it's just in my innate bones finding ways to save money. So now I just try to focus on the bigger items. And so where I can save, for 10 minutes of time, if I can save $200, that's worth it. Am I going to stand in line for half hour to save $5? No, that's not worth my time. But when you're just getting started, you work a $20 an hour job. If you go stand in line and save $50, then that for 30 minutes, I mean, that's $100 an hour. You should do that. And so that's where sometimes it depends on where you're at in your journey. So people watching this just getting started, it can be very important to embrace that frugality and learn how to save a little bit more. Because every dollar you invest now is 100x later.
Oh, for sure, right? There's also the rule of 70, right? And there's so many things you just touched on there, but one of the biggest things I want to say, and you really mentioned this, is Dan Henry was on our podcast a couple of days back, and he said you could either party in your 20s and work your whole life to make up for the time you lost, or grind in your 20s and party for the rest of your life, right? And you definitely embody that, right? Now, you know, in the come up, yeah, we watch you got the duplex, you're living with roommates, and then now you're at the stage of the $3 million personal home, and you got vacation homes and all that. So it's crazy to see, because we've literally been watching from the sideline for almost like 6-7 years now, which is insane. So that's insane how just a little bit of discipline could stretch so far. Now, I do want to talk about this, Mike, because like this is a side of you that I didn't even know about. I saw, obviously, we follow you on Instagram. I see your stories often. I see all the properties. I didn't know you lived in like more or less a mansion. But if you're comfortable talking about this, do you have a fancy car collection? Do you drive some exotics? Are you comfortable talking about that?
We interrupt your program to tell you about the Seeking Success University, the one-stop shop to learn personal development, how to build your credit and get up to 6 figures in credit, and how to monetize your social media presence, all taught under one umbrella with exclusive bonuses and exclusive content. That will be linked in the description below. Definitely check it out. Let's see you in the uni.
For me, cars just don't make sense. I have the Tesla. I got close, but I get driven a lot. Like I have a lot of people in my life who drive me places, so I get driven so much that like I'm always just on my phone, just chilling. Like if I'm going with a friend somewhere, they know they have to drive. Like that's just, you know. And I have people around me in my life that going somewhere. I don't go alone often. I have someone who's chauffeuring me effectively. So for that reason, like it makes it hard to want to really get value out of the driving experience. But I love to drive. I mean, I drove down to Florida. We're down here right now, and I drove the whole way. My wife didn't drive at all. I drove the whole trip, and it was great. I enjoyed it. It was fun going through the mountains. You know, you're going down some of the hills, and I did it in the minivan. You know, the Honda Odyssey. Never thought I would like the Honda Odyssey, but with 3 kids, like, man, Honda Odyssey is like that's more enjoyable than being in a Tesla.
It's luxury.
You've got the space, right?
For sure. No, that is so dope, man. I had to ask.
No, I guess another thing is, Mike, like, everyone who's watching this, like, if you guys want, like, the proper nitty-gritty real estate advice, go to Mike's stuff, right? Like, we're not going to ask him all real estate questions here just because Matt has a plethora of content. And, like, even on his Instagram, just go check that out. But, Mike, what would you say are, like, the 3 steps to become a millionaire right now?
I post 10 times a day on my Instagram stories. So I post almost 4,000 stories a year. So you want the real estate content, I post what I'm doing every day, all the time, consistently. Like, no one posts stories like I do. Some days I post 20 stories a day. Like I'm hard on the stories. So that's a good place to go. I guess the first place to go is go and follow people like me, right? If you want to become a millionaire and you want to start making a change in your life, the content you're consuming needs to change. The people you're surrounding yourself with needs to change. So right now, if you're not a millionaire, you're probably not surrounding yourself with that kind of mindset. Like start following guys like myself in the space and digest all of my content. Start thinking about how I think about things. And you'll start thinking the same way. And birds of a feather, you know, they congregate and they multiply. So if you can be around birds of a feather, you can attach yourself onto some of that, and I think you can change your mindset. A lot of it's mindset, right? Like it's and how do you do that? The practical is literally starting to consume different content instead of scrolling the feed for 2 hours. You know, checking out like like shaking booties or like the latest and greatest like TikTok music or whatever. Like go consume some content that's going to change your life. It's going to have an impact. That's huge.
For sure.
That's a big change. It's just the mindset. Another thing is just start taking action too. A lot of people sit there, and so once you've done number 1, you start consuming. There are people who consume that take no action, and so you guys start taking action on what you're doing too, right? You can't just be just consuming, and then doing nothing with that. If you don't apply the knowledge, you're not going to develop wisdom, because wisdom is applying knowledge with experience, and then together you build wisdom. So you have to fail. You have to go through things, and if you're watching this and you fail at something, that's okay. Like I failed a ton, but I fail forward. And when I do fail, I fail fast and I move forward from it. So that's super important, I think, in the journey of building yourself to a millionaire. But it's just about like small steps, right? The third thing I would say is like, it's easier than you think because it's just small steps. You put $100 a week away. You start investing that in the S&P 500, maybe you buy a rental property or 2. In 25 years, you've got millions saved up, like millions of dollars. So it snowballs so quickly, right? And it's just really about taking small steps today, delaying a little bit of gratification today. Like you don't got to cut out everything, but maybe you cut out Starbucks instead of every day. You do it once a week. You know, instead of going to fancy dinners, you go like once a month. Twice a month. That change will put a couple $100 away every single week, every single month. That catapults if you invest smartly into significant capital.
Oh, for sure. No, Mike.
That was good.
Dude, Mike, I also want to give you your flowers, man, because Mike's a guy who he posts a shit ton on IG, and it's crazy because it's not like he's just sitting at home posting, because like you literally see him at his properties, him in the middle of a renovation. For years I've been seeing him do this, even in the pandemic. Mike, this is actually super cool. I remember I was doing a lot of stock content, and a lot of times like either I'd cover a stock that you're talking about on your active story, or I'd see it from your story. I go, oh, that looks pretty cool. I'd watch it and then do some research and make content around that. Mike has dipped his toes in so many different facets. It's crazy. And then even like business aside, Mike was probably the first guy too that I personally saw doing the 75 hard, and that's, you inspired me to do the 75 hard. So like Mike said, following the right people is interesting, because Mike has a very busy day. He's making time to come spend time with us. He's making time to do stock stuff. He's taking time for his real estate stuff, but he yet fits it all in to understand what's going around, which is super cool, because that's the next thing I wanted to ask you. Self-education is massively important. What are some steps you'd give someone kind of starting off? Like we talked about some books. We talked about you actually coaching people, seminars. What's some self-development stuff that the listeners should start implementing into
Man,
their
I would
lives?
say the biggest thing you can do in trying to improve yourself is just honestly just start consuming and being around people that are where you want to be. That's for me been bigger than any course, bigger than, it's just surrounding myself with mentors. And it's not even always an official mentorship.
Yes.
Sometimes it's like just being in the right room with the right people. You might get a few questions off,
sure.
and you might get a few answers that change the trajectory of your life. And if you can reflect on those big moments and make active change and course correct, you can have such a big impact. Like those small changes over years will change who you are dramatically. Like 1% gain a week compounded over 5 years is a huge amount of growth, right? All you have to do is just improve a little bit.
Oh, for sure.
So that's where I'm all about, is like just finding ways to do things better. And that's what I like to do in every business that I start. And I like to dabble in, you guys know I've been in tons of different businesses. I've owned businesses, I've sold businesses.
Yeah. We'll talk about a few.
I've invested in real estate heavily. You know, like if we had $50 million in real estate property at one point. Now it's smaller, obviously, and I'm expanding to the US again, but I'm planning to build that up again. And it's like, how do I learn from the things I was doing in 2017, 2018 when I exploded with JV partnerships? How do I do that better this time? And so part of that was like, one of the key learnings for me was like having less partners. I want like 2 or 3 whales. They're going to back me on all my deals that I can work with and recycle their capital, help them grow it substantially. Like that was a big change for me. Was like, I had too many partners. I was accountable to too many people, and my time was too divided, and I have a lot going on. And so for me, it's been about like, how do I step back, still grow, but be less into the weeds? And so I honestly had to like put my tools away. So when I'm on a construction site, I don't get involved. I've set a hard, fast rule. I don't pick up a drill. Like, that's one thing that saved me time. Or like, I try to get, like, there's bookkeeping stuff. I just say, hey, that's got to be outsourced by the bookkeeper. I'll review. And I just stepping away from those menial tasks and trying to outsource them. An assistant is a big thing as you start to elevate. Get a virtual assistant to help you with things. That's super key. Get them for like $5 an hour. So like, it's a very small cost to save time. I don't know. I guess just, you want to improve yourself, right? And so for me, that's just like, I'm very good at research. That's what I did for a living. After I graduated at IB, I worked at a research consulting firm. It's like all I did when I would write these blueprints is like use the deep webs of Google. And you can use Google Scholar to find anything you want. So I've just been really good at finding what I need quickly. And so that's been helpful, I think, is just like figure out what questions to ask the right questions, and the answers are all out there. You just got to know where to find them. And Google has everything. Nowadays, everything's out there. Like, anything you want to know, it's out there.
Oh, for sure.
And another thing I want to share, and Mike, I think like you're on the flip side of this equation, but for me, when I started out, like I was doing real estate, or I started like getting into real estate and learning when I was 18 years old, right? And my biggest thing was, how am I going to meet these people? And so the biggest hack I can share with people is 1, work for free, and 2, go to these networking events. Like I remember one of the networking events, I think that's where I met Mike the first time. Literally a bunch of the main guys like Mike, Matt McKeever, a lot of these big guys, they go to these events. And another thing is, if you're actually branding yourself as, hey, I want to, go into real estate, I want to become an investor, even if you're not an investor, just start saying, oh, let's talk about real estate publicly, and people will come to you. And like, Mike, you've obviously done this very well, like building your brand. I feel like you and certain people, you can just post an IG story, hey, I need $1 million, who wants to buy something? And boom, you can raise $1 million just like that, right? And with that being said, if you had to start over in today's market, what would you do?
I like this question now more than I liked it last year or the year before that. Things have fallen in the real estate market specifically, and the stock market, and the crypto market. Everything has fallen substantially. So there's real opportunity where there wasn't a year or two ago, right? Like these are going to be maybe into next year. And if you're just getting started, that's fine because you got to gear up anyway, right? The first deal is just a practice run. So if you're just getting started, that's okay too. But this is really a great opportunity. I think it's going to be a once in a decade opportunity to get involved in some of these projects. And I think that's going to be a huge opportunity for people in the next 5 to 10 years. So there is a real opportunity here, I think, to take these high interest rate environment and use it to your advantage. It is more difficult for sure. Raising capital when bonds are paying, you can find certain bond products that are paying 8%. So how do you raise when risk free is 7-8%? Like Bank Prime's almost 7. They're talking about 50 basis point hike in the next couple of weeks in the U.S. again. So we're talking maybe 8% 30-year mortgages in the U.S. We haven't seen that in a couple of decades. And prices are way up from where they were in the 80s. So trying to sustain at these rates, it's just a totally different game. And there's going to be a lot of carnage and pain, I think, which means opportunity for the right people who know how to get in there and negotiate those opportunities. Like, as an example, vendor financing or assuming existing financing. In the States, it's very common people have existing mortgages that are assumable. In Canada, too. There are assumable mortgages. You could walk in on someone. Maybe they bought right at the peak. That's okay. You might be able to walk in and take over their existing mortgage at 3%. Which case, like, you might be able to overpay for the property because you're getting really sweet financing. So you can come together on terms that make sense. So this is when creative financing, this is when, like, being super, out of the box thinking, creative financing type thinking can really flourish because there's not 3 offers on the property. There's no offers. And so your offer might be the only one. And so now there's a chance to have that conversation and negotiation back and forth. And I'm a negotiator at heart. I love it. So for me, this is where I shine. Whereas before, this is like my competitive advantage. So I'm really excited about the next 5 years.
Well, no, and another crazy thing, just to add on to what you're saying, it's actually hilarious. For years we've been saying, "Oh, the next recession, I'm gonna invest. I'm waiting for the big 2008." Well, buddy, it's here. Like, take action now. It's crazy. Like, that's what we've been hearing. Like, at least for me, that's what I've been hearing from the start. And like, I'm still 4 or 5 years into my personal development journey and my investing journey, which I'd say is quite early. This is the first time we're really seeing it in effect. Where like interest rates are sky high, real estate prices are coming down, crypto's gone to shit, stocks are down, and it's like, oh, and at the same time, the price of living has gone up high. Now I'm married. Now I don't live at home anymore. Now I got to pay rent. And it's like, oh man, like if I was only like living at home, I could have invested more. But just finding that opportunity, where is it left over? It's insane. Like, if it's ever been a time to buy, now's the time. But we talked about stuff crashing and crypto's crashed, and you had a decent interest in crypto. Let's talk about crypto for a bit. Me and Radies both being some big crypto guys. What's your stats right now in crypto? And what kind of
I had some close friends who were heavily investing into crypto, and I got caught.
Are they still your close friends, Mike?
I have a great shop, and I had a great shop that has a 3-car garage, and I had lots of power in it. I thought, I'm gonna start a mining business, and I started with 1 or 2, and then I waited, and then I waited a whole year, and I got into more, and I bought too much right before things crashed, and the price of crypto fell to the point where the cost of hydro has been rising with inflation that it's almost near break even once you factor in like repair costs, tech servicing costs, the real cost of running that business. The margins got super slim, and I bought some stuff from China that never ended up coming because some of these businesses went bankrupt through the burst, and so I bought machines that I paid for that never came. Some stuff that came that was just broken, and the company just goes bankrupt. And so there was a slaughter in the whole crypto space entirely. I like the technology. I love where blockchain's going. When I dug into it, I'm like, this is the future of finance. Like, I think we're going to move to a decentralized finance model, but I think we're early. And so when I made some of my bets investments in Bitcoin, Ethereum, some of the altcoins like Ultra, UOS that I hold as well, it's a gaming token. I have a whole bunch of different stuff that I hold. I'm like, I'm looking at this 5 years from now, 10 years from now. And so, I mean, my timing is really bad. None of us are good at timing the market, unfortunately. Like, all of us try with the crystal ball, but like, the long-term fundamentals, I think, are pretty good for crypto as an asset class, for like 10% of your net worth. I don't think it should be like 50% of your net worth. I don't think you should go all in. Like some of the crypto bros have everything they have in crypto. That's a dangerous game to play because the volatility is so high. Like, you got to have a strong heart.
I'm not all in.
Through that, right?
So Radies is all in, bro. Balls to the wall.
So I'm not gonna lie, my net worth did dramatically decrease the past year and a half now, but part of my net worth only became majority crypto because of the gains. Like, my initial investment wasn't always majority crypto. Now it's sitting at like, I think 50-50, but that's also because like my stock portfolio has also taken a bit of a hit, and like crypto, there's some stuff that'll probably never return. So some NFTs, they're probably never gonna make it back. Whatever it is. But would you ever continue to go down that rabbit hole of mining again, Mike, or are you just done with it now?
I would get into mining the way I would do it now is I call it Compass Mining or one of the big companies. I would buy some space. Yeah. I'd negotiate a really good deal to buy some space in their warehouse, and I would, buy a whole bunch of machines from them, have them maintain everything, no problems, no issues. I had IT guys that weren't showing up. We had an issue where some of the Chinese wiring was no good. We had a little fire. It was brutal to try to run my own crypto mining facility. I think crypto mining can be, Bitcoin mining can be very profitable, especially when Bitcoin tanks and these machines start selling for 50% off. You can buy the physical hardware, and the hardware actually holds up a little bit better than Bitcoin itself. So it can be great, I think, to invest in. I like it for the tax reasons too. It's an active business. So when you're mining, you get that preferential treatment from a tax perspective. So there's some really cool stuff. If you can build a business up where you had, some facilities going or whatever, the idea was I could sell that business tax-free because you get to sell a business one lifetime capital gains exemption. So that was kind of the play with that. That was why I got into it. It was from an accounting perspective. I let the tax tail wag the dog, so to speak. Should never do that. But from a tax perspective, it was a really optimized way to make money. And so I really liked it as a business. I did get slaughtered on it. My timing and positioning was very bad. But, it was okay. I learned a lot. So, and I still have, maybe those Ethereum tokens in my mind will become worth what they were worth before, in which case I'll be happy that I did it.
ETH to 10K, let's go. But okay, wait, Mike, I have a question. Okay, so this isn't for anyone here, but theoretically, right? Let's just say someone was getting paid in crypto, but they were getting paid to a decentralized wallet. Okay, do you think said person should be claiming that for their taxes, or do you think it's kind of like a hey, sweep under the rug, no one's ever going to find out?
It's cut and dry tax fraud or tax evasion, I guess. So you definitely have to declare any income that you earn. When we talk about
of course,
technology and how hard it is to trace, I don't think the tech is there yet to trace it to a hard wallet that was not bought under any KYC that you bought from South Korea that got shipped here, and no one knows it's your hard wallet. That's the I think that's another that's a whole discussion about the legislative challenges that the CRA and the IRS are going to have trying to moderate a lot of this decentralized finance, and probably why they'll squash it to an extent when they bring in their own probably centralized token using the same technology, but just anti-money laundering, anti-tax fraud. Some of the things that entrepreneurs might like about it will be gone, but it'll have all the good things about the blockchain and the efficiency and some of the great things about it. I think as they regulate it and they make it more widestream, it will make it difficult to get something like Bitcoin. You won't be able to get out. We're moving to a cashless society, so trying to get that out without going through a bank or an intermediary that reports to the IRS is going to be nearly impossible. So the challenge is, how do you get it out?
Well, not just that, because even if you go to an ATM, they have usually a heavy fee. Again, you're not KYCing yourself, but you can still be paying upwards of 20% sometimes. I've seen as low as 10%, nothing lower than 10% for withdrawing, right? So,
but again, there's that. It depends. You want to pay 10% fee, or do you want to pay however much percent tax? You know what I mean? For some people, it might make sense. Again, listen, I think everyone should pay their taxes. We're obviously not involved in any sort of maldoing, but let's talk about portfolios, man.
Stock portfolio?
Yeah, let's talk about portfolios. No, but before we talk about stock portfolio, I wanted to ask this because you brought it up, Mike, because you have a professional background in accounting, if I'm not mistaken, right?
I went down the CPA route, but I didn't finish my CA.
Okay, fair enough. But when I was reading Robert Kiyosaki and some of Donald Trump's content in their books, they emphasize if you are going to go to school for something, or even if you went to school already, they emphasize the importance of learning accounting, even at a somewhat basic level, right? You've talked about a lot of things in detail. I thought you were formally educated, which sounds like you kind of were. What's the importance of someone actually just taking time to learn some of these stuff rather than just outsourcing it, right? Because there is a point where, you should delegate, get an accountant, but there's also, one of my mentors was telling me, you should also be able to watch over your accountant's shoulder and actually know what they're doing. Otherwise you'll never know if they're doing something effectively or not, right? So what do you think the importance is? Is it worth taking some time to learn this stuff? I think it is worth it.
If you're going to be an entrepreneur, you're going to run your own business, you need to understand accounting fundamentals. You literally have to understand a balance sheet and income statement. If you don't, how? How are you going to strategically run your business and make the right decisions? Yeah. Furthermore, your accountant only knows the answers to the questions if you know how to ask the right questions. I've sat with 3 accountants recently about talking about U.S. because I'm expanding into Florida. So I've been talking heavily about the Bahamas and Florida talking about investing in the US and the Bahamas and how that tax structure plays out. And the questions that I ask the CPA determine the answers that I get. And so if they don't know the inputs,
Yes.
like if I neglect to mention something about my Canadian corporation and I didn't know, like if I was ignorant, I wouldn't know to let them know about, oh, but I have this thing going on. Like as an example, I have 3 kids. And in Canada, 3 kids gives you $650 a month tax-free money from the government. So you get like $1,800 a month cash, tax-free for 3 kids.
Okay, wait. Can you expand that? So what's the rule?
Your income below $30,000 personally, keep everything inside your corporations, you get tax-free cash from the government for your kids per month, every month. It's equivalent to like a $50,000 a year salary if you have 3 kids. Like if you have like 6 kids, it's like $100,000 a year. It's unreal. These Syrian refugees come over with 6 kids. They're just like collecting $100,000 a year and doing like contracting on the side or taxi driving, and they're not claiming any of it. They're collecting fat sacks. It's a whole hack. It's horrible. It's unethical. I don't want to get into like I don't even get it this year because my income was too high. But I'm just saying like that's a consideration. If you didn't know about that, you might not mention that to the accountant. They can't think the tax plan for you because they don't know what you're doing. And if I don't mention, hey, I'm thinking about moving to the Bahamas, which I am for tax residency, it's like, well, if I didn't mention that, the whole tax plan shifts. You need to make a whole bunch of different decisions. So if you don't know what you're doing and how that affects, at a high level, you won't know the inputs to give the accountant. You won't know the questions to ask. And so I think at a high level, it's important to have those the general understanding. You don't have to read the tax code and know every single nuance. Just know at a high level the questions you need to ask and some of the ramifications, so that you can have those conversations with the expert and get the most value from that expert. Because they know the tax code, but they don't know how to run your business. They don't know, right? There's pieces that they don't know. And so I think marrying the two and having a basic understanding of personal finance is super important. It's why I went to school for business. I actually went to Western on full ride scholarship, not for business, because my entry average was over 95% out of high school if I went in for psych. So I went for psych and I got a full ride scholarship for that. And I changed course load in first year and started doing business. Because when I went for economics, they took in my advanced calculus and functions, which I only had 92 average on, and it dropped my average to 94.8. So I didn't get the full ride scholarships. So basically, I went into a program that wasn't business to maximize the scholarships and the bursaries and all that to get through school, like debt free, which is something I did, 4-year degree. But then I went to Ivy, Rich Ivy School of Business, top business school. I went there because I wanted to learn from the best. I wanted to know finance, accounting, all of that. So I majored in finance, like entrepreneurial finance, and it was very helpful later in my career. In the first couple of years, not at all. I just got a job, and I could have got a job, not going to Ivy, making the same salary, but it's paid off now. I think a lot of the connections and the knowledge there, I've been able to apply later in my business life. So.
That's so cool.
Cognitive dissonance has forced me to, avoid. Cognitive dissonance is the idea that, like, when you do something effectively, if you don't, your brain has a hard time rationalizing why you did it. So you always find a way to rationalize that idea. And so, like, I spent like $100,000 going to school, right? And like, it was mostly funded with scholarships and bursaries and things. But what could I have been doing for those 4 years? Could I have been working 2 full-time jobs and making $100,000 a year for those 4 years? That's $400,000. Investing that and turning that into $5 million today. Would I rather have $5 million or my degree today at 30 years old? I would much rather have $5 million. So, I mean, would I do it again? I don't know. There's definitely pros and cons. Opportunity cost is huge.
Interesting.
Yeah. No, that's interesting.
That's a big fact. But on a very quick level, so what's your stance on like this whole fuck you school mentality, fuck school? Like, are you for it?
People drop out. They get a lot of value from it, and for them, that's what they need. That's their path. Yeah. Other people, I think, are more entrepreneurial in spirits, and without that guidance, they can still flourish. And so I'm that kind of person. Like, I'm a type A, highly motivated person. So whether you put me in the Richard Ivy School of Business or you put me out on the street, I'm going to find a way to succeed either way. So for me, it didn't add as much value, but for some people it does. And so I hope that my kids can find a way to light their own spark and find entrepreneurship and maybe join the family business. That's my hope for my 3 kids. I hope they don't go to school, but if they want to, I would support them totally through that journey. If that's what they need 100%. To build their confidence to run businesses, I'm okay with that. And I think that either way, as long as you're applying yourself at something and learning and growing, that's what's important. So whatever gets you motivated to do that. Awesome. So I'm on the fence. For me, I think school is kind of a waste, but depends on the person.
Okay.
No, I think we agree with you here.
100%. It's case by case scenario. Anyways, we're talking about cases. Let's talk about portfolios. What's your portfolio looking like right now?
My stock portfolio?
Between the real estate, I guess
like
real estate, stocks, crypto,
flipping business
other asset classes.
We're still actively buying it. It's not on purpose that I flip. I mean, I just started buying properties, and every time I would finish them the way that I like them, get everything really nice, an investor wants to pay me a huge profit, like 20 years of cash flow up front. And I'm like, do I want 20 years of cash flow right now? Or do I want to wait and get 20 years of cash flow over time? And I'm like, well, I could sell this asset right now, and I can buy something else for less. It's the exact same property. Why wouldn't I sell at the top and then go buy something else that needs repositioning? So I just kind of fell into flipping. I was burring, and I'm like, this property can sell at a 4 cap rate, and I bought it at a 10 cap rate. I might as well sell it and buy another 10 cap rate. So I just, every time I stabilize the property, the market pays too much, I think, or it did pay too much for the property. And it's like, well, at this market price, I'd rather just sell the property. Like, would I buy the property at the price I could sell it for? If the answer is no, then I should sell it, right? And so I rebalanced my portfolio, and that's how I kind of started into flipping. So now I have a flipping business. We always position in a way that we can hold if we have to. We're always cash flow positive. So that's the focus of how I run my flipping business, is like, I'm an investor-focused flipper, I guess, and I only flip investment properties. I don't get into the single-family stuff because that's, I think, a little bit higher risk. I like multiple exit strategies. Stock portfolio has been down, been beaten up a little bit the last year.
Dude, you're always shorting stuff, man. Like, I always hear a story, then it's like, yep, down 200K today.
I was a hero in December of 2021 because I sold almost all my real estate portfolio, and I had millions in cash. I was cashed up. And it was in a really good position where, I was doing really, really well. I was like, hey, I'm on top of the world. Like, I cashed out my real estate at the top of the market. It immediately went a little bit higher. I felt regret at first. Like, it went up another 10% or something in like that 4-month period. And then it just started crashing. And I felt like a superhero. But I took all that capital, I levered it and put it in a stock portfolio. And I rode the stock market down too. So it's honestly the same thing. I was a superhero on real estate. And like the macro, it made no sense why I did what I did. I think it was ego mainly. Because I felt like I was smarter than the market, that I was better than the market, and I could options trade better than the market. Like, I couldn't. I saved my portfolio by switching short. And so I wrote, like, November was a high point for my account because I was shorting the market. Then I switched to long. It got destroyed some more. I switched back to short again. When I finish this short here, I'm never going to short again. Yeah. I just don't enjoy the roller coaster that is shorting the market. So I think I'm going to dollar cost average in.
Sounds like you're a professional gambler, man.
Yeah, Mike. Do you think because like you're playing with such big numbers now, like you're just doing shit for fun just to feel something?
I think there's a bit of gambling there. I don't know. Like,
at least you're honest, man.
Bro,
I like to believe that I'm smarter than the market, and like I think on a macro, long-term fundamental basis, I do have an edge. Like, I do understand the economy better than the average person, and so, like, as an example, I've been shouting from the rooftops in 2022 that 2023 rates are not coming down. Everyone's like, they're coming down in 2023. I'm like, no, they're going higher. We're going to fail. We're not going to get inflation under control. There's too much capital out there. More pain has to happen. And so I've been giving economic outlooks weekly, monthly. I did what I said I was going to do. I sold almost my entire real estate portfolio. I was cashed up. Like, I had $7 million in stocks. I was all cashed up, ready to go. Like, I had a huge bag of cash. And I bought the market. I shorted the market for a bit, which was good, and then I switched to long. But with the real estate stuff, I understood the long-term fundamentals, and I still understand that there's more pain to come. I think we're going to be flat, slightly down over the next 2 years. I think rates are probably, like, my best guess right now is that rates are going to go higher into midway through this year. Towards the end of the year, we're going to see a bit of a pullback. So there is definitely, when I say pullback, I mean they're going to stop raising rates. They're not going to lower. That's not coming until 2024, maybe. And if they reduce rates too soon, that's like burning in the streets run, because we're going to have a whiplash of inflation. So you want them to stay hard. You want them to punish you because that's going to be good for the economy long term. It's going to get inflation under control. Inflation's a tax, right? Like, if you have a $100,000 property and they inflate the value of things over 5 years, I'd say, like, we've been moving at an 8%, 7-8% inflation. Real inflation's worse, but they keep changing the definition of it. So let's call it 7-8%. It's really like 15%, but whatever, for the goods that really matter for most people. But let's say it's 7-8% over a 5-year period. If this stays for 2021, 2022, 2023, and into 2024, we have 4 years of this. We got like a 30% inflation. If your property goes from 100,000 to 130,000, and you have to now sell that asset, that's a $30,000 capital gain. You're like, woohoo! Inflation carried my asset up. What actually happens is the rates crush the prices while inflation runs out of control. So your assets go down in value while your buying power actually decreases at the same time. So you're getting like double screwed. But even if inflation pushed prices up, which like it does over the long term, what you would see is that the government's going to take a slice of that. 26% tax to capital gains. So they love inflation. They're incentivized to have inflation because one, it prints themselves out of debt that they owe people. As their currency devalues, they owe less to everyone. Two, they can tax the hell out of everyone's assets that they appreciate. Yes. And they drum people's income too, right? Because everyone's expenses go up 10%. They're gonna go to their unions. They're gonna labor. Their labor unions are gonna come in and say, "Hey, we need an increase in prices." Effectively, what you're gonna have is price wage spiral. Hopefully not, but the wages come up. When the wages come up, the taxes go up too. So that's a win. The revenue goes up. So the government really isn't incentivized, other than like economic collapse results from high inflation for many years. That's like the rock and the hard place to try to navigate between crashing the economy and letting inflation run wild, which basically destroys the currency. There's a really good chance that we get through this no problem, but there's also some tail risk where we don't get through this very well. And so I think it's important if you're going to have a good stock portfolio and you're going to be, I think you should be long the market. I don't recommend anyone to short. I'm shorting right now, but don't do as I do. It's been paying off really well the last 10 days. It's been really, really well. But I'm slowly reducing my short position because I believe that long-term dollar cost average, buy quality companies, a diversified portfolio, own a little piece of every company. Buy the S&P 500, buy emerging markets, ETFs, buy a little bit of all the indexes, own a little piece of everything, and over a long-term period, you're going to win. You're going to win big. And then what you should do with that portfolio is add on a little small put position, or it's effectively shorting with no downside. It's like insurance. So you can take a couple grand and buy some of these insurance contracts, because when the market does tank, you sell those at a tenfold profit and use that to buy more of the dip. So that's a good way. There's a book called The Black Swan. It's a fantastic book. It talks about that theory. And over time, that's been back tested to be outperforming just being long the market. Is being long the market with 2 to 5% with these crazy short contracts that are there for Black Swan events. And they pay off so well that you can then buy the dip with that excess cash. So that's my preferred way to invest. I'd say just run the options wheel in the long direction. Sell puts, get assigned in companies that you love, and you hold those. And if you want to sell some covered calls for insurance on that, bonus, right? Make a little bit extra cash flow on the long positions, quality companies for the long term. So that'd be my advice. I do private lending too. If anyone's interested in looking for mortgages, hit me up. I do a lot of private lending. I fund flippers. I partner with them. So I'm more of a debt lender. I'm expensive, but I'm easy to work with. So.
Okay.
There you go.
Right on.
Cool. So, okay, Mike, tell us I know you've talked about this so much recently, but just really high level, why are you in Florida? What are you doing there?
It's cold. It's cold in Canada. Quickly, if you can. It's cold in Ontario. So I wanted to get out of Canada because it's cold. So I'm down here because of the weather. It's 29 degrees Celsius outside right now, and I have a pool in the backyard, and the kids are in the pool playing. The lifestyle is why I'm down here. But moreover, is the investment environment is amazing. Back in London, I've got 3 wholesalers that are looking for deals. There's not a lot of opportunity. If you go on Ontario, almost all of Southwestern Ontario, there's 2 hotels for sale. 1 hotel. Some multifamily, but it's horribly priced. The MLS is horrible. Down here, there's so many different websites. Yeah. It's not even all at one MLS. There's so many different websites and brokers. And there's so many wholesalers that there's literally 100 hotels and multifamily right now. They're all great deals along the coast. And there's a ton of it. So there's just so much more here. Crazy. I can go look at 100 properties and buy the right one. Back home, I've got 3 to choose from, not to buy one. The cap rates just don't make sense in the way that they do down here. So it's really comes down to the math supported down here is just nice. And economically, I like where Florida's going. I like their culture, lifestyle. It's just a good fit all around. Great cash flow.
Yes.
Depending where you invest, Naples and Miami kind of are shitty. Those markets the cap rates are pretty low.
To ask Mike, so because Florida's also a conservative state too, if I'm not mistaken, right?
Yeah, very much.
So and are you Are you an American citizen, or are you just as Canadian?
I'm Canadian.
You're there as Canadian? Okay, sweet. Okay, cool. Because I want to ask you, because that's the interesting thing I found. Because I recently moved to Calgary from Toronto, just because of the housing was just cheaper, and I just got married. And as I was here and I'm getting exposed to the markets, it's way more conservative than Ontario. And what I mean by that is the real estate's so much more interesting, where the tenant board is more in the landlord's favor. And if I'm not mistaken, that's also how it is in Florida, where if someone doesn't pay their rent, you call the I guess not the police, but the
tenant board.
Not the tenant board. It's kind of like an officer, basically, a counselor or something, and they'll come and they'll actually evict the tenant.
Yeah, the sheriff, right? And if I'm not mistaken, Florida's the exact same way, because I heard a lot of Canadians are investing for that reason, right? But what's the difficulty on the mortgage side? Because now you gotta put more down because you're Canadian, and I guess it's more. Is there more verification? Is it harder to buy it in the U.S. being a Canadian?
The larger multifamily is pretty similar. Like you're 25 to 35% down, same as at home. 25% down target, 75% loan to value. So it's very similar to buying multifamily. Yeah, I mean there's a layer of like you have to set up a structure if you're a Canadian investing in Florida. My plan is to leave Canada.
Yes.
I'll still go back and visit Canada, and I'll probably still have a business there. But like, I don't want to be a tax resident of Canada. I want to move away from Canada. I want to move to Bahamas. So that's my goal, is to move to Bahamas. So for me, it's a different situation where I'm not hoping to have double taxation. Investing in the U.S. And then there are corporate structures you can set up so that you have no very limited liability, and that there's no double taxation. So any tax you pay in the U.S., you get as a credit into Canada. And so you're not paying that much. Like the tax is actually not very bad. It's pretty optimal. I mean, I forget the question. What was the question?
No, that was actually a great answer. It was just about like, is it much harder for the financing aspect of buying a property?
There's different challenges, I think. You need to establish some credit. But if you're going larger multifamily stuff, no.
Okay.
The building is what they're qualifying you on.
Okay. And guys, like we mentioned before, go and check out Mike's channel because he talks a lot about the specifics. Even his live streams, a lot of value in there. I got a couple more questions for you.
Mike ROSEHEART on YouTube.
We'll put all the links down below.
So subscribers, something like that, on YouTube. I go live every week. I've never missed a week on my live YouTube show / podcast since 2018. I've never missed a week. I had COVID. I went on 52 weeks a year. No matter what it is, holiday, I'm always live, 7 to 8 p.m. every Wednesday, 7 to maybe 8:15 p.m. Eastern Standard Time. All of them are available for playback, so check those out. There's like 300 episodes.
Wow. Yeah, no, like I said, like actually go and take them in because there's so much value in there. And okay, Michael, I want to ask you a bit of a juicy question. I'm not going to mention any names, but recently there have been a couple people in the community who are kind of in some trouble. There's some lawsuits going on. Without going too into detail, like what are your thoughts on all this stuff?
Some of them are like people that I know, so I don't want to like talk shit because I know they're going through their own personal struggles right now. But I'll say this.
Yeah.
When things were jolly and times were good in 2021, I was shouting from the mountaintops, be careful, everyone. Prom notes are dangerous. Unsecured lending is dangerous. If you're going to secure against a property, do a healthy loan to value so you have lots of room in case things pull back. Risk analysis was, I think, in the euphoria of the market, people didn't do their due diligence and their risk analysis, myself included. I mean, I lent out on a property. I have a first mortgage on a property that I'm foreclosing on right now, and finally get the money back, hopefully end of the month. But I even went like 77% loan to value, and I'm still going to lose a little bit. Like that's how bad real estate pulled back, right? I don't think we'll see another pullback like we saw because it was just the frothy tops. But being a good operator, I think, is important. So if you're going to find someone to invest in, all the people I know that have long track records, like anyone who's been in the business 10 years or more, like me, if you've been in the business a decade and you've been doing this like consistently hitting bases for a decade, you have so much personal reserves and your brand means so much to you. Brand's important too, right? Like you want to have something to lose. That if you have a strong brand, you've been in this for a long time, you have personal reserves that like, I lost money on the crypto mining business. I even raised some capital to buy some machines, but I went out of my personal pocket and I paid them back.
Yeah,
I was like, here's a check for $500,000. Like, I'm sorry, take it from my personal stock portfolio because my brand meant more to me. Like, I could have been like a dick and be like, oh, we lost a whole bunch of money on all these properties. Like, that sucks. Or this crypto mining business went to the shit. Like, too bad. But I'm like, you know what? Like, I went in this and I personally guaranteed it. In those situations where I personally guaranteed it, I had to come due, right? And so it's important if you're going to lend to someone, even on a mortgage, make sure you have the personal guarantee on there. And then further, another important thing I think is then verifying that net worth. Look at tax returns. Look at business tax returns. Ask them for shows of net worth. What do they have? That shows their net worth. You can verify a lot of that, right? So and people weren't doing that, and there were a lot of bad actors in the space that were newer to the game, right? They've been doing it 2 or 3 years, and they started doing all these OPM strategies, other people's money. And like OPM is very dangerous if you don't know what you're doing. You aren't a good operator. And some of these people weren't good at cost control. They were just paying the top dollar to contractors to renovate. They weren't buying the best deals. Like I bought nothing. And from 2021 to 2022, for like almost a year, I bought no properties because nothing made sense until things started to dip in July. I started buying again. But for almost a year, I saw nothing that came across and I see a lot of deals. Nothing that came across my desk that made sense. And I saw these people buying everything. And I'm like, how is this making sense to you guys? We're up 40% in a year and nothing, it's all negative cash flow. I'm like, what happens if the market goes flat or down? Like, oh, well, it's going to keep going up. Real estate always goes up. I'm like, but sometimes it doesn't. So I think there's a lot of people don't come out with an analyst brain or an engineer brain or like thinking through things from an analyst hat. Put your analyst hat on and what if this happens? Run your sensitivity analysis. All of that's super important. There's been a lot of good players too in the space that have survived and that are doing well through this. So
for sure. Well, that's the thing, right? Like, I feel like the community kind of sees it too. Like, there's some, again, we're not mentioning names, but there's some people who we were like, yeah, okay, this person probably doesn't know what they're doing. There's some people that are like, okay, you know what? Their intentions were always good. They just genuinely made a mistake. And I think certain people, like you said, are actually clearing their name. They're doing what's right, as opposed to some people just aren't doing what's right. And I want to actually ask you, like, I will drop a name because, dude, at the top, it's like you, Matt McKeever, Matt Pichet. I'm probably like Stefan Arnio was also RIP legend. But like, what do you think about like Matt McKeever and like he just completely went ghost and remote? Like, what do you like? Everyone's so like confused and everyone's like wondering like, yo, what happened to this guy? Like, do you have it? Because he was your like close friend. If I'm not mistaken. Like, do you have anything to say about that?
We don't chat all the time, but we do get our at least annual couple hour check-in calls where we touch base and hang out a little bit over the phone. I'm gonna go see him actually probably when I go out west for a friend's wedding this summer. So I'll report back how he's doing. But from what I've seen and talked to him, he sounds like he's doing really well. I think Matt's made a really big shift, to do what's good for him. And, I think that he's really embracing, his health, embracing his mental wellness. I think he feels better now than when he was in a different environment back in London. I think probably he feels, and I can't speak for him, but the vibe that I get is that he's happier now. And he's in his happy place. And so for that, I'm happy for him. He's out of the trenches in some ways. He's still in business, I think. He still does some stuff, but definitely not the level that he was before with real estate and whatnot. So, but you know what? I mean, he's doing what makes him happy, right? And the whole point of financial independence, the whole point of having FIRE is to be able to just screw off, right? Like, do what you want to do. That's the whole point, right? Like, you wake up.
Yeah, do whatever you want to do.
Yeah, for sure. You can't, right? That's the beauty of it. So I have mad respect for that approach. So nothing but respect.
Yeah, I don't think anyone like dislikes him or anything. Like, I'm sure some people are probably like, shit, like I really like this guy. I wish I met him. Because it's just crazy. Oh, okay. It's just crazy seeing someone like operate at like such a high level with everything he was doing, and then like suddenly it's like, where's this guy? You know what I mean? Like, it was crazy to see. So I wanted to ask you because even a lot of your guys' content. Some of the podcasts that you guys did together was just insane, super valuable. So hopefully when you do link him, maybe you guys could film some content. That'd be cool. I think the culture would really appreciate that.
For sure. Because that's actually what I want to ask you next, Mike, was like the content creation side. Because I feel like you were way more heavier to content creation, I want to say like 2 or 3 years back before the pandemic. And versus now, the only content you're putting out, at least on your YouTube and your Instagram stories, is the going live, right? Was there a specific reason why you took the foot off the gas on like general regular content creation? Because as a content creator, like me and Radies, we run multiple different accounts. And like me personally, I got like post 4 times a day on one account, 2 times a day on this account. Like, it's a machine, it's a job, right? But I noticed you kind of. what was the reason for you pulling back from like YouTube and more?
I didn't love it enough.
I guess I
love what you do, right? Like I just found that like every Saturday I was posting. The Friday night I was working on thumbnails and keywording, and I was checking like what were the stats in this keyword, and like I'm playing with the titles and stuff, and I'm responding to comments, and like it was great. We made some good revenue from it, and it was building the brand up, but it wasn't something that I loved doing. I want to get back to making content again because I know it's something that I need to do. It's been on my bucket list for a couple of years now. It's hard when I'm chasing big deals down here. Like I'm working on right now a building that's like a potential $10 million building that I can buy for like 5 something. That's a huge lift, a lot of money there. So it's like I'm chasing those deals and having more excitement with that. But at the same time, I think that it's really, to me, it comes down to doing what you love. And if I had a partner that was helping me create that content, I would do it. I don't have that right now. I probably should invest some money in it. There's probably a good ROI to doing it. I'm going to be doing it. I'm coming out with a mastermind. I'm going to, build the team of people that I want to surround myself with. I'm going to create that life where like we go and we do these tropical masterminds. It's part of the vision that I want. And a part of that is giving back and reinvesting the capital that we make from that. So that'll make it a sustainable business where I can afford to hire someone to do thumbnails and video editing and all the things I didn't want to do. So that's going to be helping. Before I used to do it all myself. I had no help. So that's where I think having help will make it more sustainable. But I had 3 kids too. I had a pandemic baby too. So, and I had one that had some health issues. So that
Yes.
took up a lot of my time, right? It's dealing with, when you have a sick kid, like nothing else matters, right?
Yes.
It took everything in me just to keep the weekly stream going and all the businesses that I already had going. So for me, it was like, I have that freedom already. I don't need to grind. I like it. I enjoy giving back, but I can only give, you only give back, you only help someone put their mask on, you got your own on, right? So life got busy is the truth.
Yeah.
Yes.
Okay.
Fire. No, fire. Because, yeah, I get, Mike, your content was amazing, bro. It actually really inspired me when I got started. And I love to see more. I mean, your lives are definitely awesome as well. It's better than no content.
It's going to come back
really
for sure,
cool if you did
100%.
start posting again, if that's something you want to do, of course. Yeah.
That's it.
Yeah,
Okay.
that's
Couple more
awesome.
last questions, Mike. Really high level. Like, I think you explained this the best, and you're like one of the only guys to talk about this. You're getting loans against your stock market portfolio. You're doing something crazy with leverage.
Yeah,
like,
so
can you really quickly
people
explain
know
that
this, you can
strategy to
borrow
us?
against any asset, whether that be like cash value in an investment insurance product, whether that would be like a stock portfolio, real estate, against your business. You can borrow against the cash flows once you have 2-3 years of financial income. So I like leverage because cheap debt is, for me, when I have so many opportunities that can generate 20, 30, 40% return, wherever I can borrow, sub 10, borrow 5, 6, 7, 8%. Interactive Brokers is the cheapest place you can borrow money. So against a stock portfolio, you can borrow like 5, 6% right now. That's lower than Prime. Prime minus, they'll lend you. Prime -1, Prime -2. And at the peak of low interest rates, you could borrow at like 1% interest. It was free money. So like you're borrowing at 0.9% interest. Now you can borrow 70% loan to value against quality blue chip companies like your S&P 500 stuff. So that means that you can borrow, like you can lever it 3.3 times to 1. Not that I recommend doing that, but you could in theory. So if you put $1 million in stocks, you could get a $700,000 auto-approved line of credit. It's automatic. You can take it out whenever you want at Prime -1.
Wow.
So you take that out, you can buy real estate with that, and that's safe. You can lever that $700,000 up, buy some more properties. It can be very powerful when you use leverage to enhance your returns. But you got to be careful. So if you have $700,000 line of credit, that line of credit floats based on the value of your portfolio. So if your stock portfolio is in the S&P 500, S&P 500 is pulled back 15%. I think it's what it's pulled back from the last year at the lows. So 15%, say 20% pullback, worst case scenario, your $1 million becomes 800,000. So now you have 70% of 800,000, which is 560,000. So your line of credit room drops, and to solve, if you borrow the full 700, you'd have to sell $140,000 in stock to cover the shortfall, which is like maybe not a big deal. If you have a balanced portfolio and maybe 10% of it was bonds, you just sell the bonds, and who cares? Like your fixed income stuff, and you cover the shortfall, and you keep your stock portfolio, you'd be fine, right?
Wow.
If you had some short positions in your balanced portfolio, you just sell those because they'd be way up. If the market's at 20%, those short calls, those puts you bought, will be worth like 10x. So you'd have enough to cover your whole shortfall. But if you didn't have that insurance on there, that's why I recommend people don't use all the available room. Like take like 40% loan to value from your stock portfolio. You'll never have a call if you're holding quality blue chip stuff.
Yes.
Bonds and insurance, you can go 90% loan to value. So you can lever up like 9 to 1, 10 to 1. And it's pretty safe because like the chance of losing a lot of money in a whole life product is like you can't lose money. They have stop loss at 0, right? So there's some cool like infinite banking type of strategies you can use. Be careful because the fees are very high. Do the fees equal more than the tax savings shield? Each person's situation is different. So run your numbers. For some people, it can be very, very powerful strategy to use leverage to make a great return.
No, thank you for sharing that, dude, because that's, wow.
Mike, bro, I want to say something, man. You have a very interesting way of making boring things sound sexy, bro. Like, it's crazy. What you just said right now is like, it's not like, I mean, it is uncommon if you never looked into stuff before, but this is stuff like a lot of people heard before, but you just had a way to just make it sound like sexy, bro. Like, that's why, bro. Like, we need you back on YouTube, man. We need more content from Mike. God. But yeah, that pretty much wraps it up. We're gonna have a quick rapid fire round, but before we jump into that, did you have any questions for us?
I didn't prep any questions. I'm sorry, guys.
Okay. All right.
No, you're good. You're good.
Excellent. Yeah. All right. Mike, I guess first person that comes to mind, who's the most motivating person of all time?
I don't have anyone really that like I follow for like maybe Tony Robbins, I guess. Probably he's the one that, of all time, he's probably the godfather, I would say. Motivation.
Oh.
Okay.
Wow.
Okay.
That's the second person that said Tony Robbins. That's the only time someone repeated.
I mean, he's the godfather, right? Like,
Personality.
since like the
Yeah.
80s. The guy's been like, there's no one who's of all time
he
more
is.
than him.
Oh, for sure.
Okay.
For sure.
And the last question for you, Mike. So let's just say your whole life up until now was written in a book. What would the title of that book be called?
I don't know. Some sort of rags to riches, I guess, because I come from nothing. I don't know. I have to think on that.
Rags to riches. Okay, I like that. Rags to riches. Yeah, no.
Fire.
Okay. Yeah, I guess that wraps it up, man. Yeah.
That wraps it up, Mike. That was freaking awesome. Thank you again so much for giving us the time today. And guys, we're going to put all Mike's links in the description below, so make sure you check it out between his social media, Instagram and YouTube. Take a look, check it out. And that wraps this one up. Until next time, stay seeking success.
Take it easy, guys.